Hey everybody, welcome back to Swing Trading. My name is Mike Fairborn. It's great to be with you today. There has been a lot of volatility in the market. We've seen markets trade below the 200-day moving average. Of course, we're talking about swing trade timeframes here, but how does that factor in to our swing trade timing, our setups, our scenarios, both bullish and bearish? Well, today, I did want to talk about swing trading, the trend, both on the bullish side and the bearish side. I want to look at both and actually do a couple of side-by-side comparisons with stock as well as with options, just to see how those might unfold in a paper money account in that format there. So looking forward to going into that with you, and we'll try to work with that volatility, folks, as it stands right now. It's there, and we'll talk a little bit more about it. We'll look at the VIX as well, but would like to welcome you all here. Great to see you. Definitely some familiar faces. Good to have you all back, folks. If you are new for the first time, we do look at swing trading in this class. Looking at that shorter term time frame, 3 to 10 days approximately, just trying to get the meat of the moves in the market within the market of stocks out there, upside, downside, as we look at that. But let us know in the chat if you are new. Welcome to all of you. I'm joining the chat. Friend of mine, Mr. Cameron May. Appreciate Cam being here. Thrilled to have him here each week to help out in the chat with any questions. Folks, be sure and follow us too if you're interested on X. Cameron's Twitter handle is Cameron May CS, and mine is Mike Fairborn CS as well. All right, well, let's do this. Let's turn it over to some disclosures to get the show on the road here. Information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart, pattern, or investment strategy. Now, options, they do carry a high level of risk, are not suitable for all investors. Please be mindful of that, as well as some of the additional points listed there on options. Specific securities used to demonstrate analysis and trading functionality were selected randomly. Spread trading, as it states here, must be done in a margin account. Multiple leg option strategies will involve multiple transactions. Important thing to note, too, that short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a higher risk of being assigned early. Okay. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Now, this webcast discusses technical analysis. Other approaches, including fundamental analysis, may assert very different views. Paper money software application is for educational purposes only, and investing does involve risk, including loss of principal. There is no guarantee that an execution of a stop order will be at or near the stop price. Now, past performance is no guarantee of future results as well. Okay, very good. Well, let's dive on into it and get rolling here. Well, a quick note too, just as a review, an overview. This is one of the price patterns that we'll oftentimes see in this class when we're reviewing swing trading specifically, right? And that is the little bull flag pattern right up top, the bull flag. And you can see it right there. It looks a lot like a flag. I'm sure many of you are very familiar with this now, but a lot of technicians will look at this pattern because of its potential for a move that may continue on up to the upside. It may continue, and that's what they'll look for, because oftentimes we look at this trend, this move, in the direction, I should say, in the direction of the trend, higher highs, higher lows. You get a strong upward move here, but you get a very, very mild pullback. Conversely, when you're pulling back in price, it's just very mild, relatively speaking, holding definitely, we like to say in this class, definitely above the 50% of the pullback level. In other words, we're getting a lot more gain, we're getting a lot more upward move relative to the pullback, and therefore some technicians will say, yeah, you know what, I can relate to that. I think there could be a scenario here where when we break above these levels, we could see a move to the upside. And so they'll say, this stands to reason that the trend could continue in this fashion. And when we're looking at bull flags, we get all kinds of pattern retracements. We'll go into those in more detail as we look at our actual trades here. But I wanted to just highlight this, basically show you too, before we're done here, that about a 3 to 10 day move is what we're looking for on these breakouts. These types of runs here, about 3 to 10 days, really trying to capture really the explosive part of the move. We don't always get it, but that's the goal of this class, is to try to find that. We'll also, as I mentioned, also talk about options in here as well. Okay, with that, well, let's dive into things here. And look, well, shoot, I've got the NDX up right now. That's interesting. I was going to look at the S&P 500 too. I want to look at both today, but let's just pull up another long-term moving average. And folks, we go through this routinely, don't we? We go through it each and every time we're in this class. And we do this because we just want to see in general, is the market, how's it holding? Is it above the 200-day, below the 200-day? We don't always get to view that, but we do now. And you can see, we don't always get to see prices that are near the 200-day. A lot of times we can bounce off of that level when prices are going up. But I have to say this, we did break this low down through here. Now, one of the key things to note is that, and I've seen this just a number of times, it's not going to, nothing ever happens the same way every time. But if prices come back up here and they inch up, and then, oh, there's that moving average. I'm going to try to draw that just in a different line. I realize it's a green line. I should have chose yellow, but there you go. If we hit that level, that can act as resistance. And what would that be? In terms of the trend, what would we call that if, in fact, prices did do one of these things? What would that be called? While I'm waiting for a response, because I'd love to get a response in here, but notice over here, this was kind of a longer term support level as we were, it was resistance over here. But we got above it and bam, support. Yeah, it looked like a little support right there. But now we're hitting resistance. Bob says rejection. Bob, you're on the same path. You're on the same lines. Exactly, resistance. And by the way, yes, it's resistance. And as we're talking about the trend, I'm sorry, I didn't say that as clear as I needed to, but as we're talking about it, ooh, you guys are getting the stuff I'm after. The bear flag, right? The patterns come out. Bear flag, right, Carol, Jay Richardson, Andrew, you guys have got it. Jerry, yes. With the trend, that would be considered a possible potential lower high. Now I'm going to clear everything off here and just highlight this again because I just put a lot of stuff in here. There could be resistance. I would say maybe initial resistance here, maybe longer term resistance just above it. If in fact we hit it. You guys are well geared in this class for potential, and you've noted it many, many times. Yeah, bear ceilings, bear flags, you guys listed it down there. Perfect. So here's the thing. That could be construed as a bear flag, whether it be here or whether it be slightly higher here. Is it not also, with the trend, the possibility, you guys took it a step further. You said resistance, you said bear flag, exactly, but it could be also a lower high, which is a change in trend, and we could see this start to round over. So I want to be keeping an eye on this in upcoming weeks to see if we do get that curve, because we haven't seen this in quite some time. One of the key things to look at is that 200. Let's go 2-year on the 200. Just see what we've got on the 2-year. Look at that. We kind of bounced off it over here. You can see, oh my gosh, far left-hand side, I think was the last time we were actually below it. That was a nice run. That was a 2-year rally to get above that level, but there's some changes here. That looks like now a similar high. I know this one over here was slightly higher, just slightly higher, but a similar high. And like we said, this was a range. We saw the box trade in here. Bam, we're below that box trade. If we look at a measured move of this box trade, you know where that would be? Let's just give you an exact, this is oftentimes where you might find support too. So could there be a small recovery in here that we could actually take advantage of in some sectors to the upside? Namely healthcare, maybe consumer staples. Let me show you this. What I've done down here, bottom right-hand corner of the screen, I'm going to point to it. Some people, I lost people last time I did that, but right there, that's my drawing tool. It's so quick. It's easier than trying to find them in other ways. I like this approach on the platform anyhow. To the right of the Fibonacci retracements, click on this one. It's the extensions. And all I'm going to do here is just a quick way to find out the range of that box. The box was here to the top, roughly, I clicked one time, roughly down to here. You see what I'm doing? I'm giving a general level of where that box was. Now I'm going to pull this guy over here. Oh boy, that does look confusing. But okay, if I set it up right at that same level, you know what you're getting? Although this is drawn just goofy as heck, this over here is the 100 retracement, that line. There are other ways to do this too. I'm going to draw this all the way through. That's 100. Where are we at right now in our measured move? In other words, this is what I drew. I drew this high and I drew that high, and I said, take this same distance. Now shoot it down here for me and see where we're at. I don't know. This is one way to take a look at potential retracement levels where support might be. It turns out we're getting a little bit of a hammer here. I'm going to put a question mark there. I don't know if we'll get a bounce here or not. The NDX is one of those that could get a bounce. And so park this in the back of your minds, because if we do get a bullish bounce here, that could influence some of the stronger companies out there, maybe for a 3 to 10 day bounce, possibly. Swing trade time frame. Look over here. I mean, this is a little bit longer than 10 days, but you're getting the idea. That's the swing trade time frame. We could see a bounce come up here, and we looked at those resistance levels. Will we get it or not? That's the question. But at least we can have it parked in the back of our mind, and we could be thinking about it if in case it does unfold. Now, some of you too will come down here and you do this. You go right down here, you look at this and you'll say, what's this? Oh, the RSI is at oversold levels as well. Sometimes when you get down there at this level, and we actually got a color flash down here too, meaning that we did go below the 30 on the RSI. That is a less than 30. It's a little bit hard to see. It's kind of cool to see it on a 2-year still though. But that hit less than 30. That's where you get this cyan color at the bottom. We got very close here. Let's just measure this up as well, as we're thinking about the possibility of bounce trades here. Sometimes the RSI does remarkable work on markets and market indices right there. Okay, notice close to the 200-day, 200-day here as well, where we're below the 200-day here, but maybe we'll bounce. Maybe that measured move can do something here. We can also be watching this. I know many of you, we've talked about it in this class because we are so much about patterns in this class, but possibly too. Like if we look at tomorrow, or later, it won't be today because we made a new low. But if we close above the high of the low day sometime this week, we're only at Tuesday. We got Wednesday, Thursday, Friday. We've got 3 days to maybe close above here this week, above that high, and that could be a hold, and that could be an additional signal for a bounce trade, right? Close above the high of the low day. Question mark. Will we get it? We're not there yet. We're just wondering if it could unfold into something like that. That's the only reason why I put that up there for you folks. All right, folks, if you like this kind of material, like the swing trade stuff the way I do, smash that like button. Do me a favor. It really helps me out. I'd appreciate that a lot. Cam has also noted down here, too, that there is a survey link in the chat if you get a chance to fill that out. Anything you find instructive, useful, whatever you've got, whatever is on your mind, love to hear about it. I read those. My manager reads those. There's only 2 questions. Yeah, appreciate the like survey if you can. And then, by the way, bottom right-hand corner of the screen, hit that subscribe button. Again, if you're already subscribed, you don't want to hit it because it might unsubscribe you. Just a little side note there. We want you to be subscribed, especially if you want to be subscribed. Okay, by the way, quickly, I had to hit this because there's a lot going on here, but there is the S&P 500. I don't know if we've quite reached. Okay, I'm just going to draw this through here. So that might have been our measured move. It looks like our measured move might put us closer to, I'm just going to eyeball this, you guys. Here to here approximately. Maybe not quite that low, but we're getting close. We might have actually touched it. Well, we got dang close. It might be as close as the NASDAQ. We might have gotten very, very close to touching it. But there's a look. We did take out this major high over here. I found this high on a weekly chart. It stuck out like a sore thumb. 56.60. We broke it. That could be your initial resistance. Now that's interesting too, because if you come over here, just look at this with me. That could be a resistance there. Let's just highlight them. I'm going to put a blue line on each of these. Right there, longer term. Those were prior, that was a prior high-end support. Next one, right there, your moving average, and then the next one here. But that's kind of known as a range of resistance. Range. A resistance range. So just some things to keep an eye on for sure. I'll definitely show you guys this. I teach a market sectors class on Wednesdays if you're interested, where we go into this in more detail, but I like to share it with you guys here in this class for sure. Okay, I think we're good to go forward here. All right, so a couple of things. I want to jump over here and hit our sectors. Uh, mark it, sorry, sector grid right here. Now, you guys, if you step back and look at this with me, where do you see? I want to start off first. Well, I'm going to actually do a review of our existing positions here, but do you see anything here that might look like the possibility of a bull flag setting up? Let's look at bull flag first. See anything here that could be a bull flag-ish? Because I want to, we're going to look into the areas a little bit. I'm going to highlight a couple of the different things here for you too, as it relates to stocks. Let me highlight a few, just due to the interest of time. But I look at staples. We did clear this high, and we got a little bit of a pullback here. It's a little bit bull flag-ish, right? We've been looking at healthcare for a while. We've actually got an existing position right now that did go up, and it too is a little bit bull flag-ish. This actually technically is a higher low, and this over here is a higher high, and we've gone into a sideways range. So keep these two in mind for maybe on the bullish side. And by the way, yes, good, great. So some others you pointed out here, real estate. Look at that high, little bull flagish. You're waiting for a little bit of a bounce here, just like we were on the others. Utilities, perhaps, yes. Look at utilities coming over here. Utilities tends to do better at lower interest rates because these companies that have utilities are heavily capitalized, and they do carry a fair amount of debt. And so this could be another one too. Great. I saw both of those in there. Now, look at this though with me. So energy, I just want to say, energy is one other area that's a little bit trickier, I think, in terms of this. And I only say I think because let me just highlight this for it, and then we'll see what you guys think. But in terms of the flag, or the trend, and the flag, but do you see the lower low, lower high there? We have a fair number of companies making lower lows and lower highs. And there actually is one that I wanted to investigate today for a paper money trade to the downside. We haven't done a bear flag yet, but this could be potentially bearish because, this is actually a lower high too. And, more recently, lower lows. So we'll see on that. I could see one of the key things that some traders will look at. And by the way, when I said I'm only saying I wanted to incorporate the trend. I don't know. It looks bearish based upon the trend. That's it. Lower lows and lower highs. And that is the key distinction that we talk about between really deciphering a bull flag and a bear flag. Where's the trend at? Just like we said over here. Notice how we took out the high? We broke the high. And now it's looking a little bit bull flaggish. We broke this high. And we broke this high again. They were small, but we still broke them again. And we got a higher low, a higher low, a higher low. Okay. Will that be a bull flag with the trend? That's all I was considering. Okay. And so we were looking over here. It's more like a lower low, lower high. Okay. Very good. Let's do this now. Okay. So let's scoot back to I think that's all I wanted to show you right here. Oh, by the way, look at this. We had this trade. This was our inverted head and shoulders trade that worked out for us in terms of our target, in terms of our paper money account. I was looking at this earlier, and it actually broke up again, but then it had this massive gap down today. But that was the Verizon trade a little while ago, just as a side note. Wasn't really planning on showing that, but hey, it's sticking right out like a sore thumb on our screen, so let's look at it. Here was a trade. I told you guys I would put this trade on if we did get a close above the high of the low day, which we did last week. We finally got it. And so I put it on Wednesday. It was actually in my market and sectors class. That's the high bar. We had to break it. We had to close above it. This was the low day, right? And here's the trend. Higher highs, higher lows. We had a good earnings number right there. Really, really a strong gap in the chart right there. You could see that gap all the way from the back of your room. That was a gap. We gapped up higher, positive on earnings, right? Market interpreted that as positive. That was so now that I've highlighted this, here is our flag right there. And we were just simply waiting for a close above the high of the low day, which we got on this bar. And that's where I took the trade at. So we took it. We're in it right now on BAX. Now, we said in terms of management here, we kept, and we did some comparisons actually in the Wednesday class. We said, hey, we can put the trade below the low of the bar, the day, or we could put it below kind of the range, the potential exit level. Okay, so my trade stuck in. I didn't get knocked out of the trade, and we ended up breaking higher. It was very close on this pullback bar, but we broke up. We hit our T1 target right there. So the T1 was hit. That's the prior high. That's the initial smallest move that we would take. Now we're into T2. Target 2. Target 2. We'll pull this down so we can get a proper view of it, but that's just the full extension of the initial pull going higher. In other words, I'll just click it like this. Go here to here. I've got this, so I've got the pull. I'm going to duplicate it, and I'm just going to drag this guy right over here to that low, and then that's our high. That's basically our target range right there at 40, which was just very close to these prior highs over here. So we're looking at 40. One important distinction that we talked about in this class is an approach that we use. Is a few different approaches. One of them is we take the moving average, and we've used the simple, we've used the exponential. They're very close. So it just depends. I'm not going to distinguish between the two. I think some people really like one or the other, but I'm just going to say I go back and forth, just showing you simple and the exponential moving average, but a 10-period moving average to try, because we've talked about how it can try to help really capture. Remember, we're looking at 3 to 10 days on our move generally. Sometimes we go to 14, but like in terms of a bear flag, yeah, it captured it here. It captured it here. We go back and see it again, but also in terms of a bull flag, you see how prices got above that moving average and we're just holding it. And so we say this. Now, if we break above T1, which we did do, back on Friday, we broke higher. We had a really good day yesterday, but we retraced back. What we do is we revert back to that moving average as a potential exit level now. If we broke below that, and if it traded just during the day through it and we were able to get out, that is, then we would be pretty much break even right now. But we're sticking with that trade for now, and that is where that exit's going to be. So what I can do is we can find this trade right now. We've got 200 shares on that right now on BAX. It was a little bit, smaller price stock, but I'm going to put the potential exit in the form of a stop. We talked about those earlier, right near that level for now. This is one thing that we need to manage each day, whether we're using an alert or a stop itself. I'm going to put it in right now, about 35.30. Okay, so what I'm going to do is just go over into activity and positions, working orders. We don't have any working orders right now. We can, you know what, for the sake of just time, let's do this. I'm going to right click here and I'm going to put in an alert, but I will flip this over into a stop order. Okay, if we go at or below this level, and I'm just going to say breakdown. Okay, just to manage this trade. But we're giving it a little bit of slack to kind of move. Now, there is one thing. Do you guys recognize this pattern up here? It's a pattern. And some people might say, Mike, I'd get out of this because of this pattern. Some might. That is an evening star pattern. Kind of similar to a morning star. You get the strong move up, test, and then pull back down. It's a question mark. A lot of times those follow through to the downside. So you have to be very careful. And some might just say, Mike, take the profits as you've got them. I'm just going to let this play out and see if it does go below that moving average and just kind of keep watching it every day. Like I said, I'll put a stop on though when we're done and just get that all lined up, okay? But just for the sake of ease, I put that on now. But that's what I say until we get to this target up here, or unless, something else comes up for another reason we want to get out at. But that's the target, and I've got a little bit of a short leash on it right now. Now, the thing is if it goes up a little bit, or even sideways, that moving average will tend to do what? It's 10 period. It's going to sneak back up, and if prices don't go up, it's going to knock us out of the trade if we don't get moving up quick enough. So it'll try to lock in some of those paper profits as well. All right. Let's see, here is Costco, and I'll take a look at any questions in the chat after that. But Costco, folks, this was a trade we did. This was a short put vertical trade. And as you can see, it went south, but we talked about the possibility of that happening because of earnings right there. But it was a trade where we said, hey, we're gonna put in kind of a built-in buffer in there in the form of a long put and a short put. It dipped below that level and we hit our max loss or dang close to it basically that day when we got through 1,000. It was very, very close. So we could either, decide to close it early or not, just got out of that trade. Some will get out right there as prices are dropping. But here is that dip. But again, we had sold the 1,000 put and we bought the 995 put for a credit. It went against us, and the numbers on Costco were, how'd they do? Let's click on it and find out. Yeah. Okay, so they missed it by about 6 cents, I guess, earnings is what I'm looking at there. Yeah, it had been a really interesting trend, and that was a very interesting bull flag, but we had elected to do that with a short put vertical. It did go against us, which is really interesting because sticking on the food theme, because we're going to move right now into Kroger. Kroger, kind of the I should say the food retailers, the large food retailers. Kroger's not a warehouse, though, is it? Not like Costco or Sam's Club, but there you go. There's Kroger kind of anticipating that they might do something similar, but because the trends were up, but Costco just got slapped down. And there is Kroger. So moving into Kroger here for a potential trade. Let's get going with this. A quick look into the chat, though, before we get rolling. How you guys doing? Think we're doing okay? Cam has got us caught up. All right. Excellent. I am using just candlesticks here. Just candlesticks, Isaiah, on this one, if that was to me. Yeah. Let's see, always seems to me the gap will get filled. Your thoughts on it going down to 31? Oh, was that for backs? Oops, sorry. Real quick, I'll take a look at that. Oh, all the way down here. You know what? That's one interpretation. We use this because remember we were looking at healthcare and we saw healthcare showing some strength. And by the way, there are some stocks out there in the healthcare realm. They're actually quite strong. That look like the bull flag. So the sector showing strength there, and we were saying, hey, maybe the stocks were too. And then we saw this bit of a flag pattern here with the change in trend. And so that was the reason. There is a fill, you can fill a gap for sure. There's measurement gaps, there's runaway gaps as well. I think there's I should say, there's about there's 3 different types of gaps. This was kind of a runaway gap here on the earnings. I would categorize it as that. Others might see it differently, but yeah, by the way, just while we're at it, quick note, there's Cencora. Notice you're getting a breakout there. That had a big flag pattern, as well as ELV, I noticed was over here. Just breaking above highs too, kind of looking like a inverted head and shoulders pattern off the bottom. Maybe a little bit of a cup and handle-ish over here too, but healthcare kind of showing some strength. Okay, some of them are. Okay. All right. Good question. Now back to Kroger and sticking with that theme. Do you see over here, we actually had traded Kroger once before and we did hit our gains on Kroger. Do you remember this? This was a few weeks ago, but this was the flag pattern we were trading. And that was the flag pattern follow through. Didn't hit its highs, but what did it do? Let's zoom in on it. What were one of the ways we get out of these stocks? When it trades below the 10-period moving average. We got out right there. That was the very first time we got out. And we got out at a really good level, considering all things, before a little bit of a dip. But we traded this once before, right? This is actually the target. So that target was hit. But now it looks as though it's setting up for another potential flag pattern. And I'm going to adjust this now a little bit lower. Oop, let's just activate this. And I'm going to highlight this pole of this flag, which has changed to about there. So I would say that this is really the flag, the pole of the flag measured in this price range. I'll draw it out right here. There we go. This is it right there. From that level to that level, here's your pullback. We broke above our moving average. And what else did we do? We hit our T1 right there. Uh-huh. Let's click this back. There we go. We hit our T1 right there. Here's the pole, the flag. There is I should say the pole. There is the flag itself. We've used this as a signal before. Breaking above or closing above, breaking above, after a pullback like this, the 10-period moving average. This was also a hold right there. We closed above the high of the low day, which we had not done previously. And this pullback right through here, we didn't. Okay, so that's kind of like construed as an entry point. Past earnings construed as a positive by the market. It said, hey, that was a good number according to what the market perceived it. And there is the breakout right there. Okay, so that's our T1 target. T1 got hit. Now T2, we could look at getting into a trade now. Let's talk about this. A couple of different approaches. Let's do a comparison on this right now. Let's look at stock, like just entering a stock trade, but then also I wanted to look at an option in terms of a short put vertical, right? Just capturing the income. Now I don't want to necessarily like put two trades on like this is what we would do like in a standard account. I'm only doing this as a comparison. That's it. So in this account, I can afford to do it. I'm really just wanting to teach you guys so we can do a comparison week to week and see how each is turning out. The first scenario is stock. So stock, we're going to do this. We're actually going to make a purchase here with our stop below the 10-period moving average, which is exactly the exit that we look for, potential exit, right? We talked about that before prices are able to trend up to their target. So let's do this. I'm going to copy this. I'm just going to duplicate it. Let's kill this guy over here. That was an old trade. It was an effective paper trade as an example, but let's pull this one up and move it over here. So where is our target? Our target's actually there off of that move. So you say, gosh, Mike, it's not that much higher. That's true. It's not that much higher. And so this is where I want to do a comparison. Some people might wait for a pullback to maybe support here if they wanted to. I want to show you one because I wanted to just do something live in the class in the paper money account while we've got it as a comparison. Some could say, hey, there's a support. We might bounce off that. We might head higher. And that might be our T2 target right there. Okay. All right. So it's a few points up. It's still about 3 points higher, roughly. Right, and we've got about a 3-point down. This is what the trade looks like here from this perspective. Now, if we did a trade and it did dip below here, we would try to exit it. Right, that could be where our stop is, and that's going to be right around the 40, about 64.50 level. So let's go ahead and do that right now with 100 shares. And see if we can hold above that level as our comparison. We'll just do a straight up 100. Okay, so I'm going to right click up top. I'm going to go to buy custom with a stop. The stop down here, let's put this as a good till cancel order. And that was at 64.50. All right, and let's just see if we can get this trade in now, right now. And let's look at that. Okay. So we're really just playing a T2 target. Oh, I did that too quick. I'm just going to show you what that looked like again real quick. Sorry. I accidentally clicked on it twice, but here we go. 64.50. I'm not going to put this one in. I'm just going to visually show you what it was showing on our screen there. There is the order confirmation dialog box. Okay, this is what we've got here. You got a buying power effect. Of course, it's not recognizing completely what we would get, let's say a downside mid, if we were to exit out at that level, but it is showing the cost, it's showing the entry and the potential exit right there for 100 shares. And so we've got it in place and that's all lined up right there. Now, obviously this can be dragged up or down below that level. In the live accounts, we should be able to put a custom alert right on the study itself. See that you could put an alert over here right on the moving average. So as it goes up every day, let's say you happen to miss it, you can still create a study over here, click on the study, and then what you can do is set that up. We don't have time in this class to do it right now, but we can set it up so you could get an alert if it trades below a 10-period moving average, for example. So there's some really cool tools in here to help us kind of watch prices as they're going higher. The good thing here is even if you stay flat for a little bit, that moving average will help to keep, sort of minimizing their potential loss as prices go up. All right, but that's one way to look at Kroger here on the breakout. Now the other side is, because it's been going up, it's a consumer staple, and we saw, remember, consumer staples showing that bull flag as well. That was one that had broken up highs and is kind of going sideways. And so we're kind of playing strength, the sector strength as well here. This is just an example trade within that group. Let's do a side-by-side comparison here now, though, on a selling a put through here. And let's just see where some of our levels stand over here. It's kind of a wider range, but our weeklies might have more legs to kind of take a look at here as well. So looking at the monthly, this is going out 37 days. We got a 65, a 60 with these deltas over here. Okay, a lot of times we're looking between 20 and 40 delta. Again, the delta, just to understand the delta itself, impacts the price of the option based upon a $1 move of the underlying stock. In this case, it's a negative delta. So a dollar up, it would impact this by a negative 32 cents, which is a positive for us if prices can go up. In this case, we're just looking to try to make potential income. Let's look at that 65 right now and see where we're at. We'll go ahead and sell the 65 right here, okay, at this level on the monthly. And you notice that down here, well, we got a 60 though. It's kind of a wider range. In fact, it's actually too wide. That's a really, really wide range. I was looking to normally do maybe a leg or two. So let's go ahead and take a look now at the weekly, the 31. And now you can see we've got a number of these listed over here. The spreads are too wide though on that weekly. That's not going to work. Okay. I guess I was looking at the spreads initially on the monthly. They're just not going to work, guys. Yeah, look at the variations here. And we just don't have a lot of volume. We've got a lot of volume on the stock, but this is a good example to say, hey, what is the volume on that open interest? Ooh, single digits up and down. Can't do it. And I think our strike over here is just a little wide on the 60-50. But hey, we could still look at that as an example trade, just to kind of highlight this for us. Let's just look at this right now, between the 65 and the 60. Yeah, it's a 90-cent credit. And what does this look like over here? $400. Yeah, see, the problem here is with that wide leg, potential credit's 90. Your potential credit, max profit. But look at the max loss, 410. That's really, there are, I would say, definitely others out there that are more favorable with such a wide leg. Sorry about that. Yeah, but at least you guys can get a sense of this. Let's just back up for a second. So on one side, some might say, I'm going to take the trade, and we think that this might, ultimately bounce up here and continue higher to maybe the 70 level as an initial point. The other side is that we sell a put up top here, and we sell a put, let's just say at a lower level, we buy a put here. That creates a short put vertical. And as long as the price of the stock, what traders are looking for, as long as the price of the stock holds above that level by the expiration date, they're looking to collect that max gain. Okay? And we talked about short options being assigned ahead of that period of time. That can certainly happen. But here is kind of the consideration. This is bullish to neutral, right? If we had more strikes, we could say, well, what about below 62.50? We don't have that, unfortunately. But that's a little bit more of a range. So then some traders would say, well, if it holds above 62.50 and doesn't go, below that level or below the 60 level, it kind of holds in this range over that period of time. If you look at it, prices can go three directions. They can go sideways would be one. It can go down a little bit, and it can go up And generally traders are just looking to get the max gain if it can hold above that 6250 level as an example. Okay. Didn't realize those weekly options would be so bad. So we can't do a direct comparison on that one. However, what we can do is a direct comparison on the bearish trade that I want to look at. Remember, we looked at energy. Let's do that again. Let's take a quick peek. If you haven't seen this, we talked about initially using some of the sectors as a guide for where the bull flags are, where the bear flags are. That's a bit of a bearish flag right there, perhaps, with the trend being down. And so what do we have in energy? Well, I pulled that up for us ahead of time, and I looked over here, and I did go into S&P Energy right here. And as I was going through this list, I noticed that there are several that are showing bearish type flags. Here is one, Halliburton. Okay, you guys, first thing, what does the trend look like here? What's the trend? This company generally won't do as well with lower energy prices too, and that's been the trend of maybe like crude itself. Okay, it has been going lower. But can you identify this trend? Lower lows, lower highs across the board. Now, look what we're coming up to right there. Resistance. If we flip this upside down, it kind of looks like this, like that. You can flip this upside down too. Just go up top here into your minus sign right there, Halliburton, just to put a minus in front of HAL. And now you get to visualize everything in the other direction. Do you see what I'm saying? Do you see the potential flag right there? This shows bullish, but it's actually bearish. But it could show that we got above our T1 target and we're just barely bouncing and ready to go up higher. Now, the only problem is we're looking at a minus HAL. And I just did that because I like to look at things to the upside as well. I'm just kind of, my eyes are more geared to that. Here's just HAL. Now, where could that be? Actually, if you look at it, it might put a target around 20. So we could begin to break lower here. Okay. So let's do this first. I'm going to put a put on, a long put trade, and then we can look at the short call vertical very, very quickly. Okay. So let's do this because I realize there's a little bit of a time lag and there was a few things to get through, but let's take a look. This has a lot more volume and the open interest is much, much better over here. But this is going to be kind of in reference, folks, to what you think the price of the stock is going to do. Is it going to be stronger to the downside? Well, the long put would take more advantage of that, right? And we're thinking that's going to take about, well, it's going to be, 10 days out or so, 3 to 10 days to make that move if it does go down. And so generally, we're looking at about a month. You want to double that time roughly to give us basically a month's worth of time left. And that would be kind of like this weekly right over here, this weekly option. Okay. But the only difference is the open interest is not good. So we're going to use the March, still got a little bit further in time. I'm sorry, not the March, the April right here, just a few more days, but we're sticking with that front month option because our time frame is a swing trade time frame. The move should happen quick if it does in fact happen is what we're looking for. Okay. All right. So a lot of times traders might be looking at a delta that is maybe in the 60 to 70 range. Here's one that's right in the middle here. And we're just looking at that move coming down. The theta decay is a penny right here. So let's put this trade on right now. Okay. And we'll look at that. By the way, spread here is very, very good on our Halliburton. We're looking for this trade and we're long. So we're in the ask column here. Okay. To put this trade on, don't worry about that stop. I'll put that stop on after we're done for the trade because I did want to ultimately do it based upon where the stock is at. But let's go ahead and click on the confirm and send just to show this to you though. So this is what we're looking for. There's your max profit. Obviously, if the price of stock goes to zero, it's highly unlikely there, but that is our trade for one option there. Okay, so we've got that. And what I'm going to do next is, so we've got a long option to the downside, and the other end is maybe a short call vertical up top. Okay, so I'm going to quickly put that in as well and use some of the same characteristics that we looked at previously in terms of our delta. right? So between 20 and 40, I'm going to choose the 26 right here. Okay. And we are selling the 26. And what I'll do is I will go down to the 28 right there. We'll do a couple of contracts here. And that's going to give us a credit of 94. The buying power effect right now is showing 0. You want to double check that on your end for your paper money trades as well. But there you have it. There's a break even, etc. I'm going to go ahead and send this on through. Now, this was designed to, just like we looked on the put side, for prices holding below that level, but it's a bearish to neutral trade. All right, folks, that was a lot that we gave you right there, but I wanted to do some comparisons on this, and hopefully you found that informative. If you did, smash that like button. It's been great being with you all today. Thanks so much, Cam, for your help with the chat. There is that survey link as well. Folks, I look forward to future discussions with you guys going forward. Have a great rest of the day. Bye-bye.